Welcome back to Bullberry and Brief. I'm Joe Quartucci,
I'm Arpit Sharma.
and we're here going to bring you guys a great market report from last week. We're a little bit late on bringing the podcast to you. I had a couple of things going on. I'll be very transparent with our listeners. I got my first colonoscopy. I'm sure you all wanted to know that. It was wonderful. I got a propofol-filled nap, and that caused me to be delayed in giving you guys this wonderful show. But we got great commentary for you on last week. The Dow punched fresh record highs. Arpit's favorite asset class. That's a joke, everybody, especially compliance. Small caps led the way with the 2.7% gain for the week. Dow was up 2.2. NASDAQ struggled a little bit. NVIDIA earnings, we talked about that in the previous week, how that was going to be a big driver for tech stocks. We didn't get the boost from that we thought we might. Even though the earnings were good, it just did not yield the results. And I definitely am going to want to hear from Arpit on that. But S&P punched out another gain. WTI crude, which is the big story right now, as we talked about a lot from Iran, down quite a bit. That losses continued throughout the week this week because the idea that we would end up having some sort of deal in Iran continues to be the belief of the markets. Gold also down 1.7 as the dollar continues to strengthen. For my big crypto enthusiast, and I like to cover this every week in spite of Arpit's feelings about it, Bitcoin and Ethereum were both flat for the week. So we continue to see what we've been seeing all year, which is the market wants to move its way upward in spite of all of the big scary things that are happening out there. So what are your takes on market actions last week, Arpit?
Well, markets continue to win. The Dow's over 50,000.
We're back to 50,000. I said that would happen. I said that we'd eventually end up back with the Dow over 50,000.
Eventually, Pam Bondi's probably, cheering out right now wherever she is. But
She did a
hey,
good job.
markets continue to roar.
Yeah.
Earnings are fairly good. We are analyzing earnings all across the board, and generally, Target, Walmart, all these guys were not that bad. Consumers continue to spend. We are seeing inflation now, and that's becoming a really big story. One thing that we track on the daily are Fed futures, which pretty much, for those of you who don't know, you can indeed invest on whether or not you think the Fed will make certain actions, and people do that every day. Millions of trades happen every single day on this, and we call it the Fed futures. If you look at the Fed futures for 1 year out, so September 2027, it is around a point, let's say in the midpoint fours on increasing rates. So people are expecting rate hikes. Now, I don't, whether or not we prescribe to that that's what the market's pricing in. But Joe, isn't it kind of interesting that inflation is high, people or market participants, the intelligent market participants are expecting higher interest rates in the shorter term. Yeah, markets keep roaring.
Yeah, we saw the 10-year hit really high levels, highest we've seen since 2007.
Yeah.
We talked about that last week too, how to watch for the 10-year, and it still ripped quite a bit higher. Again, we're talking about last week. It ripped quite a bit higher, and the market just kind of shrugged that off. It shrugged off the 3.8 year over year headline on inflation that you're talking about. One of the things that stood out to me was 28.4% year over year increase in gas. Where we saw a huge increase in year over year on gas. Energy up 17.9%, and on Monday of last week, that caused the markets to trade down. After that, the market just continued its regular rip, and I'm with you on that. I'm excited. I'm glad. We
Yeah.
are generally we want the market to go up. We're believers in that, but I would like it to go up in a healthy way, and I'm just not so sure. And I continue to think that they're properly pricing in what inflation will do. And most of the sectors of the economy do well with lower interest rates, and we're looking at potentially at least leaving them where they are, if not increasing them. A big wild card in that, of course, is Kevin Warsh
Yeah.
was sworn in as the new Fed chair. A lot of people think he's going to be more dovish, and that's just a fancy way of saying that you will ease interest rates because that's what President Trump would like. Historically, he has not been a person who is very dovish, but maybe people think that he wouldn't have been appointed to that position had he not basically said, "I'm going to be doing that." So it is a curious case, and I'll be wondering what to see or what to think. I mean, obviously, it's not just him who makes that decision,
Mhm.
but it'll be curious to see how that all pans out.
Yeah, no, it's a debate whether or not he was just appeasing Trump or is that what he actually believes. Now, I don't know. I think, internally, I don't think a rate hike makes sense. Yeah, inflation is really, really high, or higher than what we really want it to be, and inflation is rising. But, from my knowledge and experience is that oil shock inflation is not gonna be impacted by rate, right? These what we're seeing here are more so one-time shocks of inflation, and we tend to see those taper off in the medium term. Because when the inflation reading hits, it's done. It's in the system. So it's are would hiking 2 more times impact that in any way? Impact the inflation? I don't think so. I think it's more so just more dangerous. It might be more dangerous for the economy if we did hike.
I
Uh,
actually fully agree with you. I said this all throughout the Biden administration when Powell, Secretary Powell at the time, or Fed Chair Powell at the time, was hesitant to cut interest rates. I was like, you're doing more damage to the economy long term. When it was very clear that inflation actually was transitory, I know transitory was an ugly word. They were wrong about how long it was going to stay, but it fell very rapidly in 2023, 2024. By the time President Biden was leaving office, inflation was at 2.5%, which is higher than I'd like it to be, but certainly not what it was at the peak. And
mhm.
so, and that's not carrying water for Biden. I don't think he and his team did a very good job of properly addressing higher costs for Americans. But I'm just pointing out that the the move that I understand the mandate from the Fed is to increase interest rates when we have higher inflation. But if you're looking at whether or not this is a one time or short term boost in inflation, it seems to be that unless oil prices do remain elevated. The one big thing that I do worry about though, and again, I mentioned this on many of the shows that we have, is and I'm not trying to dog on corporations, but we as the consumers, if we're willing to pay more and they know that, they're not going to voluntarily cut prices. This goes back to the whole decoupling of consumer sentiment and economic activity. People are pissed off, but they're not going to stop spending because they actually do have the money. The amount of liquidity in the economy remains very strong. A lot of leftover slosh around from the COVID funds, but wages over the last 5 years have gone up dramatically,
Yep.
as much or more than inflation. So people do have the money. We talk about the K shape too. So yes, down on the bottom, not so much. But if you're in the middle or upper class, you definitely are not having trouble filling your gas tank. You might be mad about it, but that's the thing that I worry about with inflation. Maybe having a little bit more teeth than just energy prices driving it.
Mhm.
Energy prices aren't a big part of it, and so I think that's just something to be discussed. If you don't mind, if you don't mind to add on that, let's shift over to NVIDIA's earnings. I know you looked at those closely. Kind of an anticlimactic story
Yeah.
there. Obviously, they beat on Q1 revenue, 81.6 billion versus the 78.9 billion estimate. Profit was tripled year over year. I mean, we talk about semiconductors all the time. They
Largest company
raised
in
the
the world, by the way,
say
tripling
again,
profit. Largest company in the world, tripling profit.
tripling profit. I mean, it's unheard of. They raised their dividend from 1 cent to 25 cents, which is a significant increase in dividends. So now you have a dividend paying stock. Now, I know in your CFA training, you would tell us that that's not the best use of capital, right? Once you're paying out dividends,
Yeah.
it means you don't feel like you can invest that money and get a return on investment. So they're giving some of it back to their investors. But that also brings in a whole new type of investor who might want to buy the stock.
Yeah, no, I wouldn't say a 25-cent dividend in NVIDIA's case is gonna bring in any yield investors yet. It's it's yeah, we generally don't always wanna see that, but it's also not a problematic. 25 cents, again, not a lot, but it is a lot for those who have thousands of shares. And there are people that have thousands of shares of NVIDIA,
Yeah,
that does
especially people that worked at NVIDIA. They got
NVIDIA,
a lot of RSUs over there.
they definitely have a lot of that coming in. So seeing 25 cents dividend, it's not a make or break thing. It's not a sell, 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 sell. It's certainly not a buy, buy, buy either. One thing that we saw in NVIDIA coming out was that they had the new sections that they were coming out, the replacements for the Blackwells,
Yeah,
and those look from what we're seeing again positive,
yeah.
positive developments.
You're going to know more about this than I would, but are the new chips more memory efficient with the shortage of memory? Is that kind of the story there?
Yeah, I mean, ultimately what they are is that they're faster, stronger, better, more equipped for AI training,
Okay.
right? The Blackwells were good. I think these are the Veras. Again, they're gonna sell these guys out. One thing that's actually kind of interesting, that I would like to also, I guess, talk about, and this is kind of deviating a little bit from NVIDIA and
That's
more
okay,
so
man.
going to Google, Apple, and all those guys. The AI. data guys, they're buying all these GPU towers, right? It's not just one chip, they're buying towers with hundreds of chips in there. One thing that we track on the the professional, when you're looking at these companies, you look at their accounting statements, their balance sheets. These guys are increasing depreciation life cycles for chips. So what a depreciate, when you're a business owner, you buy something, you buy an equipment, you have a way of depreciating your equipment. You can do either 3 years, 5 years, 7 years. There's a
You can
standard,
accelerate it all into 1 year.
or you could do it on to 1 year depending on the equipment. These guys are they've increased the depreciation lifetime of the chips that they bought.
How
What
long?
so they increased, I believe, to around like 3.8 years was what we're
Yeah,
looking at.
yeah, yeah, that's concerning to me.
And so the one thing that does is that, for those who don't know, is that it's actually gonna reduce costs on your income statement because you don't realize it all in the same year. You're
Right,
spreading the cost.
splitting it over the years, yeah.
But the big debate is, with the way NVIDIA is creating chips, shouldn't the depreciation actually be shortened?
You're
Shouldn't the chips
replacing
buying now be worth less?
I guess what happens is if you've already, I mean, now we're getting into conjecture here, but if you've already spent the money and it's big money on the chips, you're probably gonna wanna take it through its life cycle. Now, if something comes out that's dramatically better, then maybe you do need to make the capital expenditure, but if it's fractions of a second faster, or I don't know, man, that's beyond my area of expertise, but I do know that one area of concern that I do have is if these chips have to be replaced every 3 to 4 years, the cost had better come down or CapEx is gonna remain very high.
Well,
And
that's yeah.
that's concerning, I think. And again, if the new chips that are coming out are better and faster and therefore more expensive, then CapEx is gonna go up. And I think that's where you're like, if you look at like these good quality blue chip names like Google, Amazon, Apple. Apple's done pretty good this year. It's up 20% year to date.
Yeah.
But they're lagging the semiconductors because, I mean, obviously semiconductors are blowing the roof off of it. They're lagging because they're having to spend money to keep up with the AI race, and it is not clear that that can be monetized. So it's like it is, and it also it looks like they might have to do it again in 2 or 3 years. So it's or 4 years. It's very kind of, it's almost like an infrastructure race at the corporate level that that is actually probably going to be a drag on earnings for some of these big blue chip companies. And again, the promise of AI and what it can deliver, I mean, who knows? I mean, it's amazing. And I talked about this with you recently as we discussed, where you can effectively use various different versions of artificial intelligence within our business. A business owner can replace or augment is the better word. I don't want to replace any of my people, but and a lot of the
Yeah.
business owners don't augment what their people are offering for the price of one employee or for a fraction of one employee. Boy, it's very tempting to do that. And I think that's why, but how do you monetize it? So at some point will Anthropic start charging 2 or 3 times what they're charging now? And you're not going to get that base user that you get with Chat GPT, but you would get the business owner who says, man, I really need to be more efficient. This is a good way for me to do it. And I just don't have those answers. I wish that I did. But I can tell you that investors are looking at this, and it has a very similar feeling to the dot com. Is we
Yeah.
don't know who the big winners are going to be, but a lot of big companies are spending enormous amounts of money, and if they can't find a way to monetize what they're doing, then there could be something brewing with those big blue chip earnings. And earnings are what drive the stock market, right? So expectation that earnings will continue to rise. We trade on forward earnings or next year's earnings, isn't that right, Arpit?
Yeah, yeah.
So if they miss their earnings, their stock prices don't just fall small, they fall big because you were buying an expectation of the next year. If that doesn't materialize for whatever reason, it has to come way back down. That's where you get some serious issues. Now, it's been a long time since companies have missed earnings. So, I mean, not individual companies, yes, but we haven't seen the S&P miss earnings in quite some time or dramatic, go negative on earnings in quite some time, which is why we've seen a very long period of prosperous movement upward. Circling back really quickly, I did want to point something out and just ask you about it because I know this is another area that you know a lot more about than I do, which is the buybacks of stocks. NVIDIA is buying back 80 billion on top of the 40 billion they already authorized. That's 120 billion dollars of buybacks. That's a lot of buyback for a stock price that's already really high. That means they're gonna shrink the supply of the stock available, so that ought to put upward pressure on the stock too. Again, provided they continue to hit earnings, but it also means that they think that's a good investment, right?
Yeah. So ultimately that's the way to look into buybacks. Is that you see companies aren't going to waste money for the most part. Companies aren't going to waste money on buying their own stock if they don't believe their stock is going to rocket. Now it has been used in the past to make it seem like the company has faith and then and kind of encourage people to buy. But generally, we do like buybacks, and we're seeing buybacks happen a lot more, especially in the last 20 years. And that's kind of the difference maker between U.S. stocks and other stocks around the world is that U.S. companies massive buybacks. You haven't seen dividend yields increase as much in the last few years. Dividend yield is usually around the standard mid 2 to low 2% range for the S&P 500, almost always. But buybacks are constantly increasing to where the real yield of holding the S&P 500 is like around 5%, 4 to
So
5%.
companies are sitting on a lot of cash,
Yep.
and they are using that cash
To buy
not
back the stock.
not for investment in future growth, but in buybacks.
Yeah, or to show support alongside NVIDIA. Salesforce, part of the whole software side, did a historic 25 billion in buybacks.
Yeah. I mean, and you're well, that's small on a relative basis of the 120 billion that NVIDIA is doing. It's a much smaller company than NVIDIA.
Yeah, it is, and it's a show of trust in the company.
Yeah.
Or maybe they're lying to us and trying to get investors to spike up their stock price. Because remember, these guys get paid. They don't get paid more than $1 million salary. They get paid,
Yeah.
halfway through, but they get bonuses.
They get bonuses and stock options, meaning
A
they want
lot.
the stock price to go up. So, no, that's an interesting thing. Salesforce is a soft spot for me because I don't want to say anything negative and get myself sued, but they are tough to work with sometimes. Okay, I did want to point something else out too on the NVIDIA earnings. They did exclude China from their Q2 guidance after
Yeah.
the trip that Trump led to China. So I think that's an interesting thing. I would say that also there was some catch up amongst the other semiconductor companies. So we saw AMD up 8.1% last week. We saw SMCI up 0.9 or 9.5% last week. So just other things did seem to catch the slack that Nvidia left in its wake. I mean, again, there was nothing really bad about their earnings.
Yeah.
Just just something they guided 89 to 93 billion. The consensus was 87. So they guided up, which, you would think is going to be a positive thing. And my guess is that stock will continue its march forward unless the AI trade begins to break down. It's highly correlated to where people think the AI stuff is going. Again, Friday we closed heading into that 3-day weekend with major fresh records. Dow at 50,500, as you said, locked in its 8th consecutive week of gains. We had the S&P break its streak last week, so it did not continue that march forward. But the Dow did have now has 8 consecutive weeks. That's you need to go back many years to find an 8 consecutive week rally for the Dow. As I mentioned before, the small caps. Talk a little bit about small caps in an environment where we're expecting rate increases, which is what we talked about at the onset of the show.
Mhm.
How in the world are small caps leading the way? What's going on there?
So, there's a couple of things. One of the part of it is that these guys have been beating up for so much for the last few years that it's sort of I don't know, would you say a relief rally in a way, but a buying of these companies because they're still relatively cheap. And again, general expectations are longer term rates should be normalized. So when you're making the expectation that rates are going to come down, you're going to want to buy these companies. Uh, so it's a lot of the combination of you're expecting a recovery in smaller cap stocks. You're still seeing relatively decent earnings across the board. There's so long as there's not a major recession and rates, longer term rates, you expect them to come down. Then there, that's why we're starting to see a little bit of a rally in small.
It's a good thing to see when you see small caps doing well. That's usually a sign that people think growth is coming because small cap companies can't perform well.
Yeah,
I did poke around the GDP now, showing 4.3% right now for Q2. That is a stunningly high number. We didn't
yeah,
have a great first quarter at 2.0, and I actually expect that number to be revised down. If we end up with a 4.3% print in Q2, that will be an enormous number. Now, we only have about a little over a month left in Q2. I would expect that to come in a little. My
yeah.
my read is like a 2.8, 2.9, because again, higher gas prices will lead to higher GDP. It's inflation can actually cause economic activity to grow because people are spending more money.
Hmm.
A couple of big winners, just the quantum sector in general. I know we've talked about that before, but not on the show. you and I have. Quantum sector got a big boost from Commerce Department, giving them a little bit of a love fest. They got CHIPS Act equity money from their industry peers. So for those of you that don't know, during the Biden administration, there was a very large infrastructure package passed, but also a CHIPS Act that was passed that focused on semiconductor companies and reshoring a lot of that manufacturing of chips onto American shores. When President Trump took over, he did some different things with that money by executive order, and some of that stuff will be parsed out in the courts. But as of right now, they're waving their magic wand of lots of government money where they choose, and quantum computers was the one that got a little bit of the fairy dust this week. And so all quantum stocks got a big boost. Highly volatile, so be really, really careful in that space. You want to touch on quantum and what its promises and where its risks are?
Yeah, so its promises are the moon. So for those of you who don't know, and my knowledge of quantum is relatively pretty amateur as well. Quantum is just a different way of computing, from what I know. Is able to,
Very, very fast, very, 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 very smart.
yeah, where a normal computer does a zero and a one and zero and a one at a time. Quantum can do it twice in multiple different spaces. That's the idea. As for quantum, it's extremely difficult to kind of analyze it
Because it's
because
not realized yet.
it's not real. It's not realized yet at all, and especially
So,
the
so people
smaller.
are betting on the come, right? One day there's going to be a breakthrough, and when that happens, you want to be a part of it. It's like investing in AI maybe 10 years ago.
Yeah, and that's kind of the idea is that so you had the AI hype cycle happen. People who missed out on it is like, oh, okay, quantum is gonna be the next thing down the line. Therefore, let me just get ahead of it now. And I don't really like that idea. I think it's a pretty bad form of investing. Because these guys have no revenue, they have all costs, they don't have any profit, right? They're living entirely off of investor money, so it's a very very risky gamble. And also, when it comes to quantum, it may not even happen in next 5, 7, maybe even 10 plus years. So you got to think, are those
I've heard as
companies?
far as 30 years out on some of that stuff.
Yeah, I mean, the 30-year part may be reduced because of just advances in AI.
AI can help solve it quicker.
It could, but the one thing that AI can solve is energy and
Right.
cool. And
Right.
quantum requires incredibly cold temperatures. From what if I can remember,
I'm not sure you're right about that. I think AI it's not going to solve energy and cooling
yeah,
in the way that we can with engineering, but it might think of ways we haven't thought of yet to solve those problems. And it's kind of like the same thing with healthcare, right? AI is figuring out healthcare better and faster than any human being has before. And so we're making advances there that we hadn't thought of yet because it reasons in different ways and it looks at problems and combines them together and says, "Hey, maybe you haven't thought of this." It's really I'm not sure you're right about that, but again, I understand what you're saying though. Like it may not materialize, but what if a person says, "Hey, I want to make a small bet here. 2% of my overall portfolio across IonQ and Credo Tech and Global Foundries," and says these are companies or D Wave. These
mm,
are companies that I want to own, and I don't really care what I'm going to put. Like I mean, think about it this way: you put $2,000 in NVIDIA in 2009, you got $3 million today. Put a
yeah,
couple $1,000, you put 3,000, $5,000, and maybe one day you hit it big with these stocks. Now, I mean, they've run up quite a bit, so now you're not getting them for as cheap as you could have. But I mean, I guess that's the question: is if you want to be speculative, that's where Bitcoin, quantum computing, AI, individual stocks, if you can find them, that's where, or micronuclear is another one where you can be speculative.
mm,
Those are opportunities to see your money grow faster. However, this is the part that I wanted to make sure we get across. You can also see it disappear, and so whatever you put into a speculative investment needs to be understood that you may, in fact, lose everything that you put into it. Otherwise, you shouldn't be speculating. That's what speculation is. I'm hoping something really big happens, but I'm taking very, very, very big risks. Is that fair, Arpit?
yeah. I think that's the correct way. Now, personally, I never found the need to speculate in my investments. I always go to the casino if I want to speculate it.
Hey, put a lot on black.
Yeah, I mean, I would have better odds at the blackjack table than betting on a penny stock. But again, if if you have a conviction in the play, then technically whatever the
That
price.
is that is how people get really wealthy. I mean, you
Yeah,
have two ways you can do it. One, you can invest with discipline over a longer period of time, and become wealthy that way. I mean, I talked about in the past. My son recently got a job, and I ran through the numbers with them, and I was like, "Hey, man, if you save X amount per year, starting right now at the age of 22, by age 50, you're going to have $3-4 million. By age 60, you're going to have $9 million, and that's with a really, really moderate rate of return. If you get lucky, it could be more than that. The other way, and a lot of people are attracted to this nowadays, and I'm just bringing it up to play the devil's advocate, is to concentrate some of your money in a big winner. And again, I also agree with you. It's very hard to predict what those big winners were going to be. Like, I don't think anybody was calling for NVIDIA to be the largest company in the world in 2009. But if somebody had conviction or patience, they could have gotten it big with a small amount of money
And I can tell
on
you,
that. So I understand what you're saying about you don't need to do that. But I would also say it's okay if a person wants to, as long as they understand what they're getting.
yeah, yeah.
I would
Uh,
say what I would say to people is keep your fundamentals, and then if you want to speculate, speculate. Sorry, Harper, I interrupted you.
No, I was gonna say, like, again, not financial advice. I would always stress, be cautious no matter what. And understand again, if you're doing, and even Benjamin Graham said this, it's always all right to have a certain pocket for these type of these type of plays. I
Yeah.
guess you'd say, because if doing a little bit keeps you from doing it with the rest of your assets, then why not? And if it hits, it hits.
Okay. Yeah, I like that. Okay, big losers for the week. Intuit down 18.3%. They're laying off 70% of their workforce.
That didn't
A
help.
bad EPS guide. Everything is looking rough for them. Is that a victim of AI
Yeah, it's software.
software? Yeah.
Just software.
Yeah. I would also say Sterling Infrastructure is another one that was down. Cost of capital with rising yields because there's a heavily debt laden company. Data center build out, you'd think they'd be winning, but again, cost of capital, a big deal. Oh, and your favorite, Mister MicroStrategy, what is that guy's name? I can't think of it right now.
Michael
Michael
Saylor.
Saylor saw. Here's a great example for people who follow Bitcoin. Leveraged Bitcoin was down 5%. Bitcoin was flat. So Mister requires, or I say Mister for short, MicroStrategy requires Bitcoin to rise. Now, he's got the capital backing to continue to buy Bitcoin, and he's done that. Now he's talked about potentially selling some Bitcoin, but we'll just have to see how that all turns out. But that was one of the few stocks that went way down. Talk about speculative. It doesn't get more speculative than MicroStrategy, but it is a almost meme level following for those that are big Bitcoin followers. That's pretty much everything. I would just say this, and then I'll pass it back to you, Arpit, to close us out. I want to remind everybody, inflation is 3.8. Look for a higher print this month. I would be very surprised if we're not over 4%. Big energy costs, lots of food costs. Core inflation, 2.8. That's when you pull out food and fuel. That's still too high. The Fed doesn't like that number to be above 2%. It's well above 2. So that kind of goes back towards pricing in hikes. It's non-trivial at this point, all the way through March of 2027. I'm not sure what that would do to the real estate markets, but it probably wouldn't be good. And then finally, I'll just say it again, the head fakes on Iran just continue, but the market does not seem to care one bit. We'll come back and finish that up this weekend when we talk about what happened this week. There's been more, yes, it's going to happen. No, it's not going to happen. But in terms of last week, it seemed like for sure it was going to happen. And then oil prices fell, then they popped back up. And now it's just hard to say. So inflation, Iran, those are the big stories for the back half of 2026. What do you think about all of that?
Yeah, I think it still continues to be the major story. When we start going towards when we start transitioning to the second half, start to look for if we have peace, and we're supposed to have a peace deal soon. If we have peace
I
by
still think
then,
we will have one. Yeah.
yeah, hopefully, knock on wood, everything happens. We get a peace deal before the second half. Expect to start to see maybe the latency effects of the oil start to seep through the oil blockades, right? Start to
Yeah,
see prices on food continue to rise, especially rice and anything else that requires uses of phosphate, sulfur.
there's damage that's already been done that cannot be reversed. So the markets can look forward, but the cost of producing products and food this year will be higher for
Yeah,
the whole year. And it remains to be seen whether companies will eat that or pass it. So far, they've been passing it. That's why we do have the inflation that we're seeing. But there may come a time at which the consumer says, I can't do anymore, especially that bottom end consumer. And
Would
that's what I still worry about and watching. So we'll come back and hit on these subjects next week. We gave a relatively short show this week, but there was not a lot going on. Market did stay, moving in the positive direction. I'm going to close by saying to everybody, pay close attention and stay nimble. And we will see you next week when Arpit and I come back and cover this week's action in the market. Thank you for always tuning in. Like us, follow us. We're on YouTube, we're on Spotify, we're on Apple Podcasts, anywhere you can find us. Put a little review on there. Tell us what you want to hear about. We would love to chat about what you want to hear. We've also got a slate of guests coming our way. And one of these days, I'm going to get that first sponsor on here and start talking about their great products. But I've got a lot on my plate, colonoscopies and all. Just can't get myself to finish up all these little projects I've got working on. We'll see you next week.
that's it.